Right, no fluff. Let's get straight into it. Today we're talking about why the market is, well, it's full of absolute head cases.
Yeah.
Officially, the CMT nerds call it behavioral finance, but we're going to break down what it really means.
You're saying it's not all clean numbers and fancy charts then?
Exactly.
There are actual messy human beings involved. Shocking.
Get me, bruv. It's all about the mess. That mess is what the syllabus calls market noise.
Right.
Think of it like this. You've got the real music, the fundamentals of a stock, right? But then you've got all this other racket, hype, rumours, your mate Dave down the pub giving you a dead cert tip. All that racket, that's market noise.
So you're talking about noise traders.
Yeah.
The mandem, who are buying a stock because they saw it on TikTok, not because they've, read a P&E ratio in their life.
Exactly. They're trading on feeling, not facts. They're the ones creating the noise. And you've got them going up against the informed traders, the suits, who are supposed to be rational.
Okay.
But the noise can get so loud, it drowns everything else out for a long time.
Right. So what's causing all this noise? What are these psychological traps we all fall into? Give me the rundown.
First up, the big one, herd mentality.
Okay.
It's the cue for the new Yeezy drop, but for stocks.
Right.
Everyone sees a ticker going green and just piles in, terrified of missing out.
Right.
That FOMO is a killer. You remember GameStop? That was pure, unfiltered herd mentality.
Don't. My palms are getting sweaty just thinking about it. You see that green candle shooting up and your brain it switches off.
Yep.
All you hear is get in, get in, get in.
It's a primal instinct, isn't it? Next, you've got loss aversion. This one's a proper head wrecker. Prospect theory, they call it. Basically, the pain of losing 100 quid is twice as intense as the joy of making 100 quid.
I know this one well. It's why you're staring at a stock that's 50% down, telling yourself, oh, it's a long-term investment now.
Wow, yeah. You just can't bring yourself to click sell and make the loss real. It's physically painful.
It is.
You'd rather live in hope and lose another 50% than just take the hit. It's madness.
Yeah.
Then there's confirmation bias. You buy a stock and suddenly you're a detective, but you're only looking for clues that prove you're a genius.
Yeah, you go on Twitter and you only follow the accounts that are gassed about the same stock.
Right.
Any bad news is just FUD. It was a theta. You build yourself a nice cozy echo chamber while your portfolio is burning.
It's your brain trying to protect your ego. And one more for the road, anchoring.
Go on.
You get stuck on a price, usually the price you bought at. The stock's tanking, the company's on fire, and you're there thinking, nah, I'll just wait till it gets back to my entry price.
As if the market cares where you bought it. The chart doesn't know your entry, bruv. It's moving on without you. So, why is knowing all this actually useful?
Yeah?
Is it just to feel smart, or can you actually make money off it?
Both, hopefully. I mean, this is the stuff that explains what the old school models can't. The efficient market hypothesis, the idea that the market is always rational and prices are always correct, that gets blown out of the water by this.
Right.
If markets were so efficient, how do you explain the dot-com bubble, the 2008 housing crash, or a picture of a Shiba Inu becoming a multi-billion-dollar asset?
You can't. It's all psychology. So when we're doing technical analysis, looking at chart patterns, are we just reading the herd's mind?
You've hit the nail on the head. That's the modern take on it. A head and shoulders pattern, that's just a visual story of the market getting gassed, hitting a peak, failing to get that excited again, and then the confidence just collapses.
Wow.
It's fear and greed drawn on a chart. You're not predicting the future, you're reading the room.
Okay, let's get into the war stories. GameStop.
Oh yeah.
That was the ultimate noise trader festival, wasn't it?
It was the World Cup of noise trading. A bunch of lads on Reddit, our noise traders, went to war with the mega hedge funds, the so-called informed traders. The price had zero to do with how many copies of FIFA GameStop was selling.
Right.
It was a story, a battle. It was pure, beautiful noise.
And crypto. Don't even get me started. I mean, Bitcoin has no earnings, no factories. Its value is almost 100% determined by behavioral factors.
Totally.
Belief, FOMO, the story we tell ourselves about it, is the biggest behavioral finance experiment in history.
And you can't forget the Elon Musk effect. The man tweets a meme and a car company's stock swings billions of dollars.
Oh, man.
If that's not market noise, I don't know what is. He's the conductor of the noise orchestra.
So the million-dollar question, How do you stop being a mug in the market, okay? How do you avoid being just another noise trader?
Look, you can't ever be 100% rational. You're human.
Right.
The trick is to know you're a bit of a muppet sometimes. Be self-aware. Ask yourself, am I buying this because I've done my research or because I'm scared of missing out?
So have a system, a proper trading plan.
Exactly. And for the love of God, use stop losses.
Yeah.
A stop loss is your logical brain setting a rule that your emotional, future muppet brain can't break. It's the only way to protect yourself from that loss aversion we were talking about.
So the goal isn't to eliminate emotion, it's just to recognize it and have rules in place to manage it.
Exactly.
They'll be the one who sells shovels in a gold rush, not the one who buys a pickaxe at the top of the market with no plan.
Conclusive. You got it. Be aware of the madness, and maybe, just maybe, you can use it to your advantage. Right, that's enough education for one day. We want to hear from you lot.
Yeah, we know you've all got some horror stories. The link to our chat group is down below. Hop in, have a laugh with us, tell us your tales, no judgment.
Now, here's a question we'd like you to think about.
Ooh.
If you know that most of the market is driven by these emotional biases, does it make more sense to study charts and investor psychology or to study company balance sheets?
Ooh, that's a spicy one. Let us know what you think. Catch you in the chat.